Good day, guys. In today's lesson, we are going to talk about cycle and market structure. Okay, first of all, we need to know the market structure, what the price is doing, what the price means. Whatever we are seeing on the chart, we have to understand what it means before we will be able to make any profit from the market. So, anytime that you open the chart, you know what you are seeing and then you know what you are looking for. In order to be profitable, you have to, understand all this stuff. And then what we will be focusing on more is price action. Okay, so we are going to use price action. When I say price action is the act of using the naked chart. Okay, the naked chart to understand what is going on in the market. You don't have to use any indicators, no filter, just raw candlesticks that you are seeing on the chart. You are using it to understand what the market is doing, and that's what we are going to be focusing on more. So now the first thing we talk about is how to define a trend using the market structure. Okay, how to define a trend using the market structure. When we say how to define a trend using the market structure, what we mean is that, you know, sometimes you open the chart, okay, and then you'll be seeing the market is like the market is moving up or the market is moving down, but you are not really sure of what exactly the market is doing. Sometimes the market might be moving up, but then in the bigger picture it is actually moving down. Sometimes the price might be could be moving down, but in the bigger picture the price is actually coming down. Okay, so as I said about price action, you see, many traders, they find it difficult identifying the trend, especially those using indicators. Okay. However, price action is a very, very simple and effective trading technique that is used to determine the trends easily. Okay. So now we talk about how to define an uptrend. And when we say an uptrend, what you have to understand is that an uptrend is when the buy order flow volume is greater than the sell order flow volume. Okay, the number of people, okay, or the amount of volume of the buyers, okay, is larger than the amount of volume of the sellers. So it could be that we have 20 people selling, okay, and then we have only one person, but then the one person who is buying, has, a bigger, lot size or a bigger volume than the 20 people that are selling. So let's say if one person has 100 lots, okay, to open a position that says buy, and then we have 20 people having zero point 0.1 lots, okay, to open a position in a sell, okay. 0.1 times 20 is going to give you 2, okay, and in this case the 2 is very, very little, okay, compared to the 100. So in that case, it means that the buy order flow volume, okay, the volume of the buy is larger and greater than the sell. And so for that matter, we have the market moving in an uptrend. All right. So now let's continue. Okay. How do you define an uptrend? Okay. See, the uptrend is confirmed when there are higher highs and lower highs. Sorry, higher lows. Okay. I made a mistake in my PDF, so you guys should forgive me. When there are higher highs, that is HH, and then higher lows. Okay. So a series of higher highs, okay, a series of higher highs and higher lows. Okay. So once you identify an uptrend, your goal as a trader is to find entry points in the demand zones. Okay, your goal as a trader is to find entry points in the demand zones. And when we say demand zones is a zone where there were there was too many sellers. Okay, sorry, too many sellers, buyers actually. Okay, there were too many buyers in that zone. So I'll give you an example. Okay, um let's say price is moving in this way. Okay, good. This is the demand zone. Okay, this is the demand zone. This where the price came and it was moved up. Okay, whatever place that the price comes, okay, and then at that point it's only touched there and then it move up. That place is a demand zone. Okay, good. But then don't worry, we'll talk about the demand zone properly in another lesson. Okay, so let's look at this example. This is an example of an uptrend. And why do we say this is an example of an uptrend? As you can see, the price moved up, then it came down, okay? Now this is where the uptrend starts. It moves up again to make a higher high, okay? Then it came down to make a higher low. Even though it is higher, it's still low, okay? Now the price went up again to make a higher high. Price came down to make a higher low, and then the price went up, okay? So a series of higher highs and higher lows is what we call an uptrend, okay? And so each price, okay, in each trend, let's say in an uptrend, the higher highs, okay, always have to make a higher low, okay? You have to be looking for the higher highs and make sure that that higher high has made a higher low, and then that higher low got broken by another higher high, and then the higher high that was created broke the previous higher high. Okay, and so when we look at this one, okay, when we look at this one, you see this was a higher high, okay, and then it made a higher low, and then the higher low broke the previous higher high. Did you see this one? Okay, and so this higher high is actually higher than this higher high, and so that means that the price is moving upwards, and then this higher high made a higher low, and then as you can see, it wasn't able to break this higher low, and so that means that the price is still in an uptrend. Okay, and then once again it went up again to make another higher high, broke this one, came back, and then wasn't able to break this one, went up again, higher low, another higher high. Do you guys see it? So it's a series of higher highs and higher lows. Okay, so in an uptrend, you always have to draw a trend line. You make sure that the trend line touches at least two or more lines before you can establish that this is an uptrend. Okay, so let's say we want to draw a trend line. We start from here, then it touches this one, then touches this one. So it's been established that it's an uptrend because you see the line is though slanted, moving up. So we are in an uptrend. So when you look at this, you see the higher high and the higher low there. All right, higher highs and the higher low, and that is how you identify a trend. I'll give you more examples as we continue. Okay, so you just need to validate one criterion, okay, and that criterion is that the buy order flow volume is higher than the sell order flow volume. The volume of the buyers is bigger, greater, higher than the volume of the sellers. This is one thing you have to put in your mind. The volume, not the number of people, the volume. And the volume is the lot size that I talked about in my other lessons. Do you guys get it? Okay, so by watching the price move from demand levels, okay, in those zones, buyers add to their positions and create an imbalance in moving the price high. Okay, so in that demand zones, okay, in the demand zones, let's go here. Okay, in the demand zones as this, there are more buyers in that zone. Okay, there are more buyers here. All right, and so in this zone, buyers add to their position more. Those who want to go long in the market, they add to their positions, moving the price up. Okay, and then here is another demand zone too. And so when the price goes and then comes to touch that demand zone, they add to that position again. Okay, and then the price goes up, comes to touch another demand zone again, they add to that. If you don't understand demand zone, just watch this. We are going to have a lesson on supply and demand zones. Okay, so at the demand zone, the buyers add to their positions, and that creates an imbalance. And when we say imbalance, it means there is no balance between the buyers and the sellers. And so, if the buyers have much volume and higher volume, the price moves up. Okay, now we talk about downtrend. When we say downtrend, it's exactly the opposite of an uptrend. Series of lower highs and lower lows. Okay, series of lower highs and lower lows. And once again, I made a mistake in this PDF too. Please forgive me. Okay, a downtrend is confirmed when there are lower highs and then lower lows. Once determined, your goal will be to find entry points in the lower highs to sell in the overpriced zones, and that is the supply level. So we talk about demand in an uptrend. Now we talk about supply. So demand is when demand is actually always down. Okay, the bottom part of the chart, that's where the demand is, and then the supply is actually at the upper part of the chart. Okay, so it's like support and resistance. Do you get the support and resistance? And so the demand zones and the supply zones for the sellers, demand zones for the buyers. Okay, and so when you find entries in the supply zones so that you sell, and then you make your profit if it goes in your favor. Now, how do we identify that a trend is a downtrend? As we talked about having lower highs and then lower lows. Here's an example. Okay, so starting from here, we have a lower low. Okay, and then we have a lower high. Okay, then we have another lower low, lower high, lower low, lower high, lower low, lower high, lower low, and so on and so forth. Okay, now once again, as you can see this, when this one made a lower low, okay, when this one made a lower low, okay, when this lower low was made, the price came to make a lower high. And as you can see, it didn't go to break this one. Okay, the price didn't go to break that one. So the price is still in a downtrend. It came to make another lower low, and it came to make another lower high. And as you can see, it didn't break this one. It didn't go beyond this one. Okay, and if it goes beyond that one, that would be a trend change, which we'll talk about soon. But I didn't do that. That means that the price is still in a downtrend. Do you guys understand this? And so the price came to make another lower low, made another lower high, once again, didn't break, lower low, lower high, once again, didn't break, lower low, and so on and so forth. That is how you identify a trend. Okay, and so when you are drawing the trend line to you, make sure that it touches at least two or more. When it's only one and two, if it's two, okay, we wait for the third touch. Okay, so sometimes you could get something like this. Okay, fine, the price is in an uptrend. Okay, it's in a downtrend, sorry. But then how do you confirm that this price is in a downtrend? As a beginner, you always have to wait for the third touch. You make sure you be patient and wait for it before it's confirmed to you that it is a downtrend. So anytime that the price comes to this place, there will be a reaction around this area. Okay, and then the candlesticks will tell you that okay, this price will still continue in the downtrend. You don't just mark 1, 2, and then say it in the downtrend if you're a beginner, because you don't really know a lot about it. And then if you take decision based on it touching the second touch, you are going to make a lot of losses that you are going to regret later. So keep this in mind. You always have to wait for the third touch. Always have to wait for the third touch in drawing a trend line. So you draw a trend line, make sure you touch first lower high, second lower high. And if there's a third lower high, good, then the trend is confirmed that it's in a downtrend. So now you can sell from any supply zone that you see. You can sell from here. Here's a supply zone. Okay. Even this place is a supply zone. So price actually came there. Okay. Supply zone. Supply zone. Supply zone. Okay. Supply zone. Do you guys understand it? All right. So we show you how to define a trend with the supply zones, okay? And then once again, you just need to validate one criterion: the sell order flow volume. Okay, in a downtrend, the sell order flow volume is stronger than the buy order flow volume. Okay, so just by watching the price moving from supply levels, okay, in these zones, sellers add to their positions and create an imbalance, moving the price low. Okay, and then you can simplify that by recognizing the majority of the candlestick colors. Okay, so with the candlestick, okay, in an uptrend, okay, when the candlestick says, when you want to know the candlestick color is actually, telling you it's an uptrend, the candlestick is green, and then when it's in a downtrend, it's red. But please, that those colors doesn't even matter, because you have to understand the market structure other than the colors, because the colors you can change it to your own settings. Some people make it blue, some people make downtrend yellow, and then uptrend blue. Okay, so you don't really have to focus on those colors. Okay, one thing that I did in order to help me identify the colors is that when you go to your chart and you are trying to find trends, please do so too. Make sure you do that. Try to identify the trends. Change the color of your candles to black. Bearish candle black, bullish candle black, all black. And just try to identify the trend based on the market structure, not on the colors. Based on the market structure, so you are able to know that this candle that is black, later when you change it to the real colors, you are going to know that, okay, this one was bearish, and this one was bullish. That is going to train your mind to be able to identify the trend even without having to know the colors. So you make sure you change it to black, and then you try to identify the trends. Okay, it's really, really helpful. Very, very helpful. All right, so let's move on. This is an example of a supply zone, and as you can see, anytime that the price came there, sellers added to their positions. Anytime the price came there, sellers added to their positions. Okay, another supply zone here. Anytime that the price came there, sellers. So you wait for the price to come to a supply zone. Okay, the zone where when the price reached, it came down. At that place, there's a higher probability that the price is going to come there again. Anytime the price comes, if it doesn't break, and if the candlestick tells you, we talk about candlestick confirmation too. If the candlestick tells you that this is going down, then you sell. You wait for your confirmation. Then that's it. Forex is very, very easy. Okay. Sorry, Forex is very, very simple, but it's not easy. I don't know. Because it's not easy because of the psychological part. Aside that, just seeing things on the chart and being like, oh, I'll sell here. It's very, very simple and easy. Trust me. Okay. So now we talk about how to identify a trend change. How do you identify a trend change? How do you say that, okay, fine, this is in a downtrend, but it is changing into an uptrend? Okay. Now, this is how you identify it. The end of an uptrend, the end of an uptrend is marked by the failure to create a higher high point. Okay. And so when you look at the image below, you see that this was an uptrend. Okay. Series of higher highs, higher lows, higher highs. But then when this higher low was made, it wasn't able to make another higher high. It wasn't able to break this to continue with the trend. Instead, instead, it came to this place on the chart. And so that means the price is about to change. And then do you know what confirms to you that it is really about to change? It is when the lower high breaks, okay, the one that failed to make a higher high turns into a lower high. When it breaks the higher low, that's when you know that this price has changed. Okay, the trend has changed. Okay, so this happens. Okay, when the higher low fails to create a new higher high, when the price fails to create a new higher high, fails to create a new higher high. Okay, when it fails to do that, and then does something like this, comes here, breaks this one, then that's it. It shows a potential trend change, and the probability that the price is going to come down is very, very high, though nothing is exact in forex. This one you have an edge that okay, the price is about to change. Okay, so you wait for candlestick confirmations once again, and we will get there because they are very, very important. They are the core factor in price action. Now let's have a textbook example. So as you can see here, you have a higher high, a higher low, but then it's lower high there. Please forgive me. Higher high, higher low, higher high, higher low. It's a series of higher highs and higher low. But then when it came to make this one, it even broke this one. Okay, it even broke this higher low, and then it came to make this one. It wasn't able to come up here to break it to continue the trend. Okay, and so in that sense, we know that the price is about to change. So it came down and then it started with a new trend. That's lower high, lower low, lower high, lower low. Okay. So in the first instance, you see, price is making higher highs and higher lows. Okay. Price making higher highs and higher lows. And then all of a sudden, the higher high, okay, broke the higher low. Okay, this one broke this one. Okay. Potential trend change. Came here, wasn't able to break this one. Okay, and then it came down. And the price changed, the trend changed. Okay. Now another example also. See, the price is in an uptrend, as we can see. Higher low, okay, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Okay. Then it broke this one once again. Price wasn't able to make another higher high. Okay. So that indicates what? Potential trend change. Price came down and decided to make higher lows. So lower highs and then lower lows. And then the trend changed. Alright. So please take a look at this chart very, very carefully. I'll send these pictures into my Telegram group so that you're able to see it clearly. Now let's continue to what changes a downtrend. And once again, it is the exact opposite of the trend change in an uptrend. Okay, so once again, the price was happily making it lower high, it's lower low, lower high, it's lower low, lower high, it's lower low, lower high, and then it failed to make another lower low. Okay, it couldn't break this one to make another lower low. Okay, instead, Price stayed above the previous lower low and then broke the previous lower high. So that indicates a potential trend change. So what you do, okay, in this case, what you do is wait for the price to come somewhere here. That's then you buy. That's it. That's how it works. That's how it works. Okay. So now a textbook example again. We have series of lower highs, lower low, lower high, lower low. Okay, lower high. Okay, lower low. It wasn't able to break this one. So now this one changes into a higher low, higher high, higher low, higher high, higher low, higher high. I hope you guys understand how to identify a trend change. In a downtrend, when the price is okay, when the price is not able to make a new higher low, a new lower low, when the price is not able to make a new lower low, when the price is not able to make a new lower low. Because if you see from this part, anytime that there was a lower low, the higher low that was created breaks that lower low to continue the trend. Anytime that there was a higher low, okay, the higher high, the lower low, the higher, the lower highs, okay, breaks it, okay, to continue the trend. So if it's not able to break it, okay, if it's not able to break it, it should tell you that there is a potential trend change. This is where it's supposed to come, and it didn't even tap that area, and then it's going to break the previous lower high. That should only tell you that the price is about to change. And then yes, it went on to change, and then we are in an uptrend. Okay, good. So another example here for you. We have a supply zone, price tapped, downtrend, lower low, okay, lower high. Now you see lower low, but then wasn't able to break this lower low. So now it indicates potential trend change. This is the previous lower high. Price came, broke it, came to tap rent. Okay, that's how to identify a trend change in an uptrend and then in a downtrend. Now, after downtrend, after uptrend, we have ranging market. Okay, and then in the ranging market, we don't have any series of higher highs or higher lows or lower highs or lower lows. Okay, the price just goes up. Okay, it gives you equal highs and equal lows. So the price just comes tap here, come back. It's like the price has no specific direction. It is just in the middle, no specific direction. The price is not really going anywhere, no real direction. Okay, the market is just going upwards. Okay, then comes down to exactly where the demand was. Okay, so this is the demand zone, this is a supply zone. So we call something hedging, whereby um one trader, okay, they'll put buying positions here, and then those same traders will put selling positions here. Not every broker allows this, okay, but then that same trader will be doing this. Okay, so what they do is when the price comes here, they have already bought, so when it goes here they take their profit, and then it triggers their sell limit. Okay, and then when it triggers their sell limit, the price come down, take their profit, and then another buy limit is here too. And then the price goes up, take their profit, another sell limit is here, price comes here, take their profit, another buy limit is here. So they are just, we call it hedging. They are just, um enjoying or taking advantage of the range. Okay, so here in the demand zone, buyers have their positions here in the demand zone. sellers, and this is where there is balance between the buyers and the sellers. Okay, the volume, order flow volume, is equal to the order flow volume of the buyers is equal to the order flow volume of the sellers. Nobody is bigger. They are all the same. Okay, that's it. Now we talk about consolidation. When we say consolidation, it it really means reaccumulation. Okay, and then consolidation is different from ranging markets. Okay, in consolidation, it looks like the market is too dull, but then consolidation comes after there is a huge uptrend or a huge downtrend. And what you have to know is that during a consolidation, the market is actually accumulating orders. Okay, accumulating orders. When we say orders, is the positions that people open. So even if on your chart, okay, you check, you will see that there is more volume when there's an accumulation. So this is how accumulation looks like, or this is what consolidation looks like. After a big trend, the price consolidates for a while, takes orders, and then goes down again. Okay, it happens most of the times when the price is in a downtrend. Okay, it consolidates a little bit. That means it's taking orders again, then it goes down. Always, most of the times when the price is in a downtrend, it takes consolidation, it takes orders for a while. The price will always continue the trend. It happens most of the time, and still that same thing also happens in a downtrend. Sorry, in an uptrend. So it's not only about downtrend. When the price is going up, market consolidates for a while. It means it's taking orders from buyers again. Then the price continues to go upwards. Okay. And so when we talk about candlestick patterns, we have something like flag, in which, as in an uptrend, the price will do something like this. Then it goes up. Okay. We'll talk about all these later. So the real psychology behind the trends, okay, is that the market takes the orders and then there is a trend. Do you guys get it? So first of all, there are orders. Okay. And so if it buys so many buy order volume, and then the trend comes, and then the distribution. Okay. So here's an example of what I'm talking about. Here, the distribution zone. Now you see the price went up. Okay, under distribution zone, that's the reaccumulation. The price went up. Distribution zone, the right went up. Okay, now trend change. Accumulation. So now you can see when we talk about distribution and accumulation, distribution is during the trend. Okay, during the trend. Okay, the price stops, takes orders. Okay, it accumulates orders. Now get this right. Even though I said accumulation of orders means the price taking orders. Get this right. Redistribution is what we use to substitute the red accumulation in a trend. Before the trend starts, okay, before the trend starts, let's say here, that is where we can say it's accumulating orders. But then during that, you can say it's redistribution it. Okay, so now there was an accumulation here when the price changed. Now we have sell order flow volume being greater, and so the trend change, redistribution, trend change. Okay, so the market moves in a funny way. You see, the market actually moves in a cycle whereby there is a downtrend, an uptrend, a downtrend, an uptrend. If you look at the bigger picture, that's how the market moves actually. It moves in a cycle. The market moves in this way. This is how the market moves. Okay. It's funny when you get to understand it, you get to understand why I'm saying this. Okay. So how do you define the speed of a trend? And we are going to use an uptrend as an example. So you find it yourself using the downtrend too. How do you identify the speed of a trend? How do you know that this uptrend is so strong? How do you know that this momentum of an uptrend is so big and greater? Now let's talk about strong trends. In strong trends, the retracement, they do not touch the previous peak. When we say retracement is when the price goes up, comes for a correction, okay, comes for a retracement, then it goes, comes for a retracement, it goes, okay. The retracement is these little trends that comes during the market. It's called a break. Market's not in a home. The market is resting, okay, resting for a while, taking a chill pill and then continue with the trend. Okay, so many times when people see these things, they think maybe the price is coming down and then it's about to change trend. No, sometimes too it's a retracement. Everything that goes up must come down. Just put this in your head. Even if it's a big uptrend, just know that everything that goes up will eventually come down before it continues going up again. That's how the market works. That's how the market works. There's no way that the price will go and go and go and go and never come back. Then we wouldn't have an uptrend. Okay. Then we wouldn't say that there is a market at all, because then there would be only buyers, or let's say there would be only sellers, because the price never came back. Even in boom and crash, okay, we have this pair called boom and crash, whereby let's say if it's boom, we have a series of little downtrends and then one boom. Okay, little down and then one boom. Even that one, it comes down. Okay, not these ones that wouldn't come down. So anything that goes down, don't think the trend is running away from you. It would eventually come down. Okay, so when the trend is stronger, the retracements do not touch the previous highs. You see this one, they do not touch them. Okay, and then we talk about medium trends. You see, it's in an uptrend, but then it is not strong, but it is not weak too. Okay, and with that one, the retracement or the dips, okay, the retracement, they touch the previous high. Okay, so this is the previous high. Price came for retracement. Price went to make another higher high. Here the previous high, the price touched it, went. Here's the previous high, the price came, touched it, and then went. They touch them. Okay, so the speed of the trend is medium, and it's normal for it to be medium. Most of the times it's medium. Sometimes too it's very 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 strong, but most of the times it's medium. So in the medium trends, the price they actually touch, okay, they touch the previous higher highs. How do you understand that the price is actually in a weak trend? Now in the weak trends, these dips, okay, these retracements, they actually break the previous higher high. Okay, and so that means the sellers are actually stronger a little bit. They are trying to match the energy of the buyers. In an uptrend and in a downtrend, it means the buyers are trying to match the energy of the sellers. Even though there are more buy order volume, the sell order volume is actually strong for very very strong. Not that strong of the buy order flow volume, but it's still strong. Okay, so something like this happens, breaks. Okay, breaks. I hope you guys understand what I mean. Good. Now we talk about the properties of the different types of trend. Now look at this picture. Once again, I'll add this picture to um I'll upload this into my Telegram group so that you guys have a proper look at it. So this is a strong trend, right? And as you can see, the higher high, okay, price came to make a higher low, okay, made another higher high. Price came to make made another higher high. So in this kind of trend, how do you take a position in an uptrend. In taking a position in a strong trend, okay, anytime that the price makes a higher high, what you will have to wait for is for the price to make a higher low, okay? And then when the price makes a higher low, you buy, okay? So how do you buy? You, as a beginner, you wait for the price to break this one. So when the price breaks it, you take your position here, and then you put your 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 stop loss below the higher low. Okay, you put your stop loss below the higher low, then you have your target somewhere here. Okay, that's how to ride with the trend. Good. And then you have the medium ones too. Once again, I'll put this picture in the Telegram group so that you have a bigger, you have a better view at it. In the Rika trend to this how it looks like. Okay, so we are done with this lesson. Okay, this lesson is over, and then in our next lesson we are going to learn about the candlestick patterns and the chartism, how to really understand the charts. Okay, so this one I wanted to let you guys know how to identify the trends, how to identify a trend change, how to know a trend is weak, how to know a trend is strong. Okay, and then in our next one we delve into like what the trend really means, what the candlesticks really means. Okay, so this was just like the introduction. This was just the basics ones, market structure, understanding me. Okay, so thank you guys, and then once again, if you have any questions, I'll leave my contacts here. You text me on WhatsApp. I'll explain to you everything that you need to know about the market if you weren't able to get this one clearly. This is my WhatsApp contact, and then my Telegram channel is Morrison Trading Academy. In our next lesson, we'll be using the laptop, not phone anymore, because in that case, we'll be talking about the charts, and then I can't use my phone to show you how to identify the trend and all of that. So don't worry, guys. In our next lesson, we'll use the laptop. Thank you, guys, and then we'll meet again.